Hello, this is Eric Thompson. I am founder of Peerless Wealth, a registered investment advisory located right here in Columbus, Ohio. As always, thank you for tuning in, especially to something called life insurance. I'm going to try to make life insurance, a discussion on life insurance, worthwhile and not super depressing and boring, although it's tough. And I think I'm doing it from I'm doing it from a very unique perspective in that I don't sell life insurance. I was insurance licensed for probably about 20 years, and I did sell a little bit of it here and there. Most of my business has always been investment management, which is what it is now. But as a sort of full service and comprehensive financial advisor, life insurance is an important part of the equation. And even though I don't sell it, because I believe that can lead to conflicts of interest, I do know a lot about it. And I urge you as clients and maybe prospective clients to involve me in any sort of conversation. And you know you're going to get some unbiased advice because I'm not trying to sell you a product for a commission. So with that, let's get into it. There are two main types of life insurance, term life and permanent life. Term life just protects you for the term that it says. Maybe it's a 10-year term, 20-year term. They have 30-year term now. So you might have a $500,000 death benefit. You typically make level payments until the term's up. And then when the term's up, the life insurance goes away. Effectively, you're renting the insurance. And some people, especially those that sell permanent life insurance, will say, oh, well, you didn't get anything out of it. And it's going to expire and you're unlikely to use it. Well, yes, but when you buy your car insurance or your homeowner's insurance, you don't use the insurance as a investment and build a cash value. You're just buying insurance to insure something during the time you need it. So in most cases, I'm a big fan of term insurance. I have it for myself and I have it to protect my family. The permanent types of insurance can include everything from whole life to universal life, to index universal life, to variable universal life. But the commonality between permanent insurance is that as long as you make the premiums paid as stated, it will last your entire life and it will never expire. They're incredibly more expensive though than term. They're usually at least 4 to 5 times more expensive in premiums. So again, with term insurance, there's no cash value. It's simple. It's cheap. I just got a quote online for a 35-year-old male non-smoker that's in good health, and it was for $1 million. It was between $60 and $70 a month. And what we're doing with this particular client is we did what's called a needs analysis, and this gets a little bit depressing and morbid, but you kind of have to pretend that you die. And you say, okay, if I'm dead, what happens to my family? And in this case, we would take the amount of income that this individual makes. Life insurance is tax-free, so you take the after-tax amount of income, and we say, okay, he wanted his wife and kids protected to be able to get that same amount of income, for at least until they're retired. So we backed into the amount he needed. And in this case, it was $2 million. And he's 35 years old. So what I recommended is that we do 2 policies. We do $1 million 30-year term policy, $1 million as a 15-year term policy. The 15-year term is a lot less per month in premiums. For most people, if they're using life insurance to protect against loss of income, which is the majority of the reason why people buy life insurance, they need less insurance as they get closer to retirement. Because you should be investing in things like 401ks and IRAs and accounts with me and so on and so forth, so that by the time you're retired, you don't need life insurance anymore. Again, it's to protect the income you lost. So I staggered the policies. 15 years down the road, $1 million will expire, but he'll have, his investments partially built up by then. Won't need as much life insurance, but he still needs some, so we'll keep the other $1 million for the remaining 15 years. That reduces his premium outlay and is a better way, in my opinion, to fund most family protection, term insurance type policies. Your employer, a lot of times, will have group term life insurance. always tell people, get the quotes from that first. Let me know what those are, and we'll compare them to a private term policy. And I usually recommend people just go online to buy term, or I do have a couple agents that people can call. A lot of agents don't push term insurance because commissions on something that's $60 or $70 a month is not very high. So they like to push the whole life stuff, permanent life stuff. So that's term. And for most young families, primary breadwinners, that's the type of insurance you need. Your health does affect your rate. The two biggest factors are if you're a smoker or if you're overweight. Those are the two things that can make you pay higher life insurance premiums. And in most policies, you do have to go through a minimal underwriting where they check your height, weight, blood, medical background check. Obviously, more serious health conditions, they can turn you down or increase your rates even more. But height and weight are the biggest ones that I see. And with term policies, you can apply, and then if the rate comes back and it's a lot more than you think because of some medical thing or just whatever, you don't have to take it and you're not out anything. So that's term. Permanent insurance, that's insurance that doesn't go away. And there are some reasons to get that. Estate planning is probably one of the main reasons I see. Some of you may have heard of the federal estate tax, sometimes called the death tax, sometimes called the inheritance tax. It used to affect a lot more people than it does. They've raised the size of the estate before that tax kicks in. And right now it's about $10 million. And there's ways to get it to $20 million if you're married with properly structured trusts. So if you're under that, you won't pay the federal estate tax. Doesn't mean you won't have some taxes to your heirs on things like IRAs, but the big federal estate tax is not there. If you're over that, and by the way, those numbers are set to go back down to 5 million and 10 million respectively for singles and couples in about 2 year and a half, 2025. So more people can be affected by this. Some families do not want their kids to have to liquidate their inheritance or part of their inheritance to pay estate taxes. So they buy life insurance, and it's usually on both spouses if they're still married, still alive, and it's usually on the second to die. And then it pays typically a trust, and then that insurance is tax-free and pays the estate tax. Some clients have said, hey, my kids are getting enough, they can handle paying the tax on it. This is case specific, but you don't want term insurance when you're planning for an estate because you don't know when you're going to die. You don't want the insurance to expire, and then you die right after that and there's no insurance. So that's definitely a good reason to have permanent insurance. I'll give you a couple other thoughts. Sometimes I see this. Should you take a life insurance policy out on your kids? I don't think you should. And this is, again, this kind of is depressing and morbid to think about, but I have 2 boys, so I know that kids cost money. If they were not there, it would actually be financially a benefit to our household because we wouldn't have as much cash outlay. Emotionally, of course, it would be devastating, but financially, we would be better off. So what you need life insurance for is to protect an income. Your kids don't have income. They're the opposite, right? So I don't think people should buy life insurance on their kid. I think it's typically a waste of money. If it's for God forbid, a funeral, if you have enough money to pay a policy, you probably have enough in savings to pay for a funeral. And you have about a 1 in $100,000 chance that it's going to happen. So it's not a big expense. So those type of policies are typically sold by agents, and I'm not a big fan of those. The other thing that I hear a lot, and see this a lot on social media, and again, it's from insurance agents, is to use an overfunded life insurance policy as an investment. And typically they're sort of pitched as being, very specialized miracle tax savings, tax shelter, credit protection, and these plans that only the rich and famous do. And there are some benefits to cash value life insurance in terms of you don't pay taxes on it and you can get through it through tax-free policy loans. But I would challenge any illustration of these policies against a traditional investment portfolio that is tax managed. If you need the life insurance and you're in the highest tax bracket and higher net worth, these can potentially work out okay, but you have to commit to them for typically well over 6 or 8 years to make them worth it, because the commissions on these things are front loaded to the agents and you're behind the first few years and it takes a while for them to really materialize. And a lot of times the proposed return that is sort of promised or illustrated rather does not seem to work out. So I would be, I've had some of my clients pitched by agents who said they should be putting $100,000 a year in a cash value life insurance and they'll build wealth better that way. And I would challenge that. I would be very careful before you would do something like that and understand the motivations behind the agents. Typically, insurance should just, be insurance, not an investment along with it. Your investments should be plain vanilla investments. Stocks, mutual funds, ETFs, real estate, CDs, and IRA and 401k accounts, with very few exceptions. So in summary, involve me in these decisions. I'm a fiduciary, I'm unbiased on the matter, and we'll sit down, we'll figure out, how much life insurance you need, how long you need it, and what types to buy. As always, I hope you learned something. Thank you, and see you next time.